Today's show is brought to you by Invesco. Adding income has its advantages. Invesco's Income Advantage ETFs are designed to provide consistent monthly income and maintain growth potential, all with less volatility and downside risk mitigation. Access some of the world's best-known stock indexes now with added income with Invesco's Income Advantage ETFs. Invesco, let's rethink possibility. There are risks when investing in ETFs, including possible loss of money. ETF risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus containing this information. Read it carefully before investing. Invesco Distributors, Inc.
Welcome to Animal Spirits with Michael and Ben. Michael, yesterday it was your birthday. I feel, I've said this before, people say I'm a crank. In middle-aged, birthdays shouldn't matter anymore, don't matter anymore. Would you get upset if someone didn't tell you happy birthday that was a friend or family member? Would you care?
You didn't tell me happy birthday. And you called, and we spoke. And matter of fact, you're the only person that didn't say happy birthday. No, I'm not upset.
In my defense, I didn't realize it was your birthday till after we spoke. I should have known because, again, your birthday is the bottom of the COVID crash, so it should be in here because I have that memory of it. I just think after you turn 21, your birthdays don't matter anymore. When you're 30, 40, 50, yeah, it's like, all right, it's a milestone. Especially when you're middle-aged and have kids, the only birthdays that matter are the kids' birthdays, and then you move on and your birthday doesn't matter anymore. Fair or unfair?
Both.
Okay.
I think it's a personal choice. I think it's a weird, not hill to die on, but
yeah, I'm not dying on. I'm just saying, to me, I don't care about my birthdays anymore. They're meaningless.
Yeah, that's fair. Yeah.
Okay.
Yeah. I like it.
Sorry.
I'm a nostalgic, I'm an emotional milestone type of guy.
I mean, I'll probably buy myself something stupid when I turn 50, but other than that, or go on a trip, but other than that, I'm not going to care.
I like when I hear from people that I haven't heard from in a while, just like a check-in, feels good. But yeah, I don't like to celebrate my own birthday. I don't make a big deal out of it, but.
Yeah, okay. See, my wife always says why don't you send this person a text on their birthday? I'm like, I don't care if they send me one. That's the golden rule.
That's weird. That's weird.
I'm living how I want to live.
You out of principle will not wish somebody a happy birthday. That's a choice. All right, let's get to it.
All right.
Thank you, though. Thank you for nothing, I guess.
Happy birthday. We celebrated your birthday on your 40th last year. It was a huge blowout bash. Aren't I fulfilling my duties for the next decade after that? I think that's good enough. All right. Markets rule everything around us. Mike Bird tweeted yesterday, I think the fact that military action and major announcements now seem to be coordinated around market open and close times is going to be one of the more fascinating and telling tidbits about this era administration. Markets basically rule everything now. Fair? That's it,
yes.
Right?
For the most part.
Right now, markets are just all powerful. They control the thing. The reason that it seems like we got a Taco Monday yesterday with the Iran war is because we're worried about oil prices. We're worried about bond yields spiking. We're worried about inflation. Markets are the transistor, whatever you call it. Markets are the regulator.
That's right. They're the piston. Is that right?
Judge and the jury.
Don't know. But last week I was talking with Ritholtz and Josh and with some people at the firm, why won't we just get the washout already?
Yeah.
And we said this, and it's true. It's the Trump put. It's hard to get too bearish because yesterday I looked at my phone in the morning for the 47th time, checking the markets as I do at 9:00, and it was a spike, and I knew that something was said from the administration about the war being over. I thought it was equally weird. So that the market, the S&P was up 2.5%, I think, at the highs, and then somebody from the Iranian administration said, whoa, fake news. They're trying to manipulate the oil market, something along those lines. And I was kind of surprised that the market didn't immediately give all of it back. Were you?
A little bit, yes. It's kind of
it came off the highs, but it was still the market at the lows of the sell-off was still up 1%. I found that to be interesting.
You have been saying this for the last 2 weeks, and you said it last week in a Slack channel too, that listen, the reason things aren't rolling over more, and the technicians always say the market has a memory, and the memory everyone has now is that 10% up day.
Yeah.
The markets are up 10% in a day.
Yeah.
That's what everyone is remembering, and they don't want to be caught off sides again. And it's weird that markets are looking past this stuff now and worrying more about that than the other way.
Yeah.
I just think that psychology of the market is really interesting because
It
obviously
is.
it's not always like that.
So I do think the longer this goes on, perhaps the market will finally just fall out of bed. Like everything will really and truly roll over. But maybe not. Maybe it is just in a perpetual. What happened in Lost? What's that? What's that word that I'm looking for called? Where you're stuck between two worlds? Not vertigo. It sounds like that.
Vertigo?
Not. It's not. No. It sounds like vertigo. I know that's not the word. Purgatory.
Oh, just like vertigo.
Not like vertigo. Purgatory.
Yes, we are in a
The market.
but
The market is in purgatory.
I tend to agree that markets probably should roll over if the longer this lasts because all the oil people are saying it's not like the prices can just go back and everything's fine. The supply has been disrupted and it's going to be disrupted for a number of months now. And obviously the longer this goes on.
That's not really a US problem. That's a rest of the world problem.
But here's the thing with oil, and we'll get into this, but when the price of oil rises, it's not just gas that goes up, it's the price of everything. Energy makes the world go round. Here's the thing that feels like a bad movie plot. This is from Unusual Whales, and a bunch of people caught this yesterday.
Just before we leave this topic, just one last thing. You can very credibly argue that the market did roll over. 40% of the index is in a bear market. So even though it's not showing up at the index level, under the surface,
that doesn't count. Oh, it's a bear market underneath the surface. I don't like those. Give me a real bear market.
Well, I'm a huge bear market under the surface guy. You, not a stock market guy, don't know about this. Huge bear market under the surface guy. That's happened a million times over the last 10 years where you have the internals wash out and then it's over.
Yeah, but that's not the same thing. Okay, just 5 minutes before Trump's announcement to halt the attacks on Iran, massive trades reportedly hit the market. People were buying futures. People were selling oil. It says they were 4 to 6 times larger than anything else at the time. So these are like unusual trades. Obviously, these trades should not have been placed. I'm sure there was some polymarket stuff or Kelshi stuff that happened. This is the kind of thing that feels like a bad movie plot where people are trying to profit off of war. It's a slippery slope, man. The insider trading stuff to me is I don't like it. I hate it. I think this is gross, disgusting.
I think everybody is on the same side of that one.
Obviously not. People are doing it. People in high positions.
I'm saying nobody likes insider trading.
People in the White House do. I don't know. People do. Can you imagine?
Wait, why are you arguing this take? I think 100% there is a unanimous consensus. Yeah, I know the people that are doing the
trading. Why doesn't it stop? If it's a 100% consensus, why doesn't someone get a slap on the say, hey, knock it off? What are you doing?
There are a lot of things, unfortunately, in this world that is 100% disapproval rating that happens.
True. Okay.
Who is for fentanyl, except for the people taking it? And I guess the people selling it.
People selling it, I don't know. Can you imagine trying to create like a macro fundamental model of this market to track what's going on? Like there are people who are trying to like every day there's an announcement trying to like, well, here's what this means for this supply and demand and this. That's why it's like the tariff announcement because like it changes so fast and moves so quickly. You know how when you have, I made this analogy on Twitter, I'll make it to you. When your kids are little, especially when they're toddlers, they could wake up from a nap or wake up from like going to bed the night before and be a completely different person than when they have to sleep. Like I feel like every kid wakes up angry and like has the don't talk to me for a half hour vibe after a nap, you know? And it's like they can be a completely different person. That's the market these days. It's a completely different person from one day to the next based on an announcement.
Correct.
So I think that if you're trying to like map this stuff out on a fundamental basis, you're wasting your time. That's my point.
I thought this was a very well said, well written tweet. A rare tweet from our friend Super Mugatu, Dan McMurtry.
Someone DM'd me like 2 months ago and said, hey, what happened to this guy? Where did he go? I like to follow him on Twitter. Occasionally he gets back into the conversation.
Dan's living his best life in Miami. Killing it. All right, Dan said, note to self, very scary times. Remember that the reason bears sound smart and end up looking stupid so often is that there are always several highly salient bear arguments. Whereas the reality that there are several billion people trying to make things better and solve problems is intellectually unsatisfying and fuzzy. This is amplified in the era of eyeball maximizing feeds dominating people's conception of the world. Do not be fooled by the psychological games of people seeking to dominate attention. Do not ignore legitimate issues. But most importantly, do not forget that 95% of the world is trying to rig the game to work out. There is a vast conspiracy to grow the economy over bears and increase asset prices. It's called society.
And this is the part of the market meaning more than ever these days. I remember Josh wrote about this like after the financial crisis about, hey, do you think like the government and people in power are really going to try to let this thing go under and not going to do everything in their power to keep it going? That's the thing. Like, if you think the world is going to end and people aren't just going to constantly send out the bazookas and spend more money and do more stuff and rig the game to go higher, you're not paying attention.
Right. Seriously. I mean, yes, sometimes, of course.
You don't have to like it. That's the reality.
Well, who doesn't like that?
The people who are betting it, the perma bears, they hate it.
I'm not talking on perma bears. So the 11
that's what he's
on
talking
Twitter.
about. Yeah.
Yeah. Sometimes the train falls off the tracks. Guess what? We rebuild.
Yes. Okay. So getting back to the oil stuff. This is a chart from, I don't remember who this is from. Energy products are at an incredibly low contribution to U.S. household personal consumption. So in the 70s and 80s, energy spending as a percentage of household budgets got to up to over 6% by the early 80s after the energy shock. Now it's down to 2%. So the point is there's a way higher capacity to handle if gas prices stay at $4 or $5 a gallon for extended period of time. It seems like households have the ability to eat it because it's not like it's a huge part of their budget.
And how about corporations? Obviously, we're talking about the stock market here. Think Apple cares about the price of energy?
But that would be the pushback would be that like the price of everything has to go up though. The price of all the inputs, the price of it's not just gasoline, it's the, airline tickets are going to be more expensive. So that's the thing. Like, this is
like the midwit meme conversation, right?
A little bit, but I guess that's the point is that people wondering, well, geez, won't $4 or $5 a gallon gas totally derail the economy? Probably not. I think we've learned maybe the margin of safety is lower this time, but everything that's been thrown at the economy this decade, it's been able to withstand. And so the question is, does it still have enough ammunition to withstand this current onslaught, however long it lasts? The market is betting right now that it does, that it can. Which, again, I think is so interesting to me that the market is so willing to look past all this stuff.
Literally knowing absolutely less than nothing about the situation in the Middle East. It's a little bit hard to imagine this lasting into the summer.
Yeah, I agree. But I don't know what, if we back off, this one straight, again, I don't get why it's called a straight. Someone's got to explain it to me. Maybe I'll ChatGPT it. This thing is like the most important piece of land in the world going forward now. Like it has more importance going forward. It's funny because Josh always says like, oh, the Strait of Hormuz. Remember for years that was his joke. And now it actually really does finally matter. But does that thing just stop mattering all of a sudden? It seems to me like it's going to be used every time that there's something going on. Unless we completely take it over.
Well, matter to what?
The world. The energy prices.
Well, of course it matters. Of course it does.
All right, Pantheon Macro, Carl Quintanilla. In $150 barrel oil scenario, we think inflation would peak in Q2 at about 6%. Now, of course, oil crashed yesterday. What was it? Did it finish the day down 8 or 9%, something like that? That's what it was down in the morning, at least. So the question is, how long does this have to happen until we get there? I don't know. I guess this is like the what if market right now. What if this lasts? What if the market keeps looking past it? What if? How about this? Mike Dorning, a bunch of people posted this. Investors are now betting overall U.S. inflation over the next 12 months will surge above 5%, implied inflation rate from 1 year break even per Bloomberg. Now, again, a lot of this stuff is before yesterday, so who knows? And the Wall Street Journal had a chart that shows market is implying a probability of a higher probability of a rate cut than a rate hike than a rate cut this year. Now, here's my question to you.
That's not happening.
What good would a rate hike do? You hike rates just so you can bring them back down? This is a exogenous shock.
Since when is destroying demand a good thing, a good idea?
In demand,
I understand why we had to do it in 2022.
Yes, that made sense.
Obviously, that made sense at the time. But for something like this, come on.
But Cullen says in the span of 3 weeks, the market went from expecting 3 rate cuts in 2026 to now expecting a rate hike. That's incredible. But I guess you could see a scenario where we back off and then that flips again. And it goes back and those expectations don't matter. But my point is, what good would a rate hike do? besides potentially push the economy more towards slowing down further?
If there was a market for these two lines flipping, I would say for the through the end of 2026. By the way, I had to Google what year is it the other day. I was writing something. I was like, wait, is it? No, it can't be 2026. Is it really? And sure enough.
And AI is not making us dumber? Putting it out
It's
there.
not helping our memory.
All right.
Anyway, my point is this. I would guess that yes, these lines would flip would be at like what, 92%?
Yes,
they would flip back.
that would be a pretty, yes. If you want to, that's like an even better bet than Seattle not winning the Super Bowl. Something like that.
You know, I got a lot of emails about Seattle winning the Super Bowl. Not a single one patting me on the back for predicting one battle. That's just the way the world works, right? Nobody wants to give you credit. They want to bring you down.
One battle after another was consensus. What was your payout on that?
What's the difference? No, it wasn't. It was like 85 cents.
Okay, that sounds consensus to me. You bet on the horse with the lowest odds of winning.
It might have even been less.
Okay, I'm not going to give you a pat on the back for that. Everyone thought that was going to win.
Hold on, this was not a recent bet. I did this months and months and months ago. I'll find what the payout was. It might have been 70-something cents.
Okay. I love the Forrest Gump analogy, so I'm going to give you this. So the S&P at the lows was down 6.8%. Maybe it rolls over and goes further, but that's the biggest drawdown so far this year. And I feel like there's a lot of people who just want to rip the Band-Aid off and get the correction over with. Remember in the storm, Lieutenant Dan's up on the mast and he's screaming like, "This is all you got? You call this a storm?" I feel like there's a lot of people who just want like, "Hey, listen, we have the reasons. Let's just do it already. Can we just get the correction?" And maybe that's one of the reasons we're not getting it. So many people seem to just like, all right, fine, let's do it. Higher oil prices, higher inflation, war, uncertainty, volatility, and it just won't happen.
I can't. Well, when you say there's a lot of people, I feel like there's a survey in your brain. Like you're doing a lot of projecting. You have no evidence that there's a lot of people.
You don't think a lot of investors assume that with everything, all the headlines going on and everything happening, that we should be in a correction right now?
Those are different things. Yeah, of course. I think there's a lot of people that say, given the state of everything, we should be lower.
That's what I'm talking about.
You're saying there's a lot of investors who want the Band-Aid to be ripped off, and that's why we're not ripping it off?
No, just assume like this, it should be. Given all these variables, we should be in a correction.
We should be.
That's what I'm saying.
Is this correction is 10%, right? There's a pullback.
5% is 5% is a
pullback.
Pullback.
It's healthy.
This is nothing.
When does the correction go from healthy to not healthy? A healthy 10% correct?
15%. 15% not healthy anymore. 10% healthy.
15% check your triglycerides. Know what I mean? Oh, I spoke to a trainer yesterday, speaking of.
Okay.
Putting some feelers out there. Not liking how I'm looking naked.
In a gym or in a online trainer again?
I want somebody to come to my house. I'm too embarrassed to go to a gym. It's just not my scene. I've never been to a gym. Can't start now.
Gym's a great place. You get to go to the bathroom and see naked 70-year-old men walking around in the locker room.
That does sound enticing. Plus, the home visit, even for Zoom, it was way too much money. $200 a session. Come on, man. In this economy?
How much is a home session going to be? That's going to be even more expensive.
No, it does the same thing, whether it's home or...
Okay.
That can't be the going rate for a trainer.
Wait, it was $200 per session?
Per session. Right?
That's very expensive. I don't know what the going rate is. That seems very expensive to me.
Yeah.
If you worked out 4 times a week, geez. That's, yeah.
I'm not doing that.
Okay.
I'm not working out 4 times a week, and I'm definitely not paying $200 per 4 times a week.
See, and you think AI is going to take all the jobs. This is my analogy. You can go on ChatGPT right now, find the best. You say, this is my body. This is what I want to do. This is my weight. This is the stuff that pains me. This is what I want to change about myself. Create the most personalized workout plan possible you can for me. You can do that right now. Give you the best, use these dumbbells, use this weight, do this many reps, do this many sets. And guess what? Some people still need a personal trainer.
Yeah,
that's why AI is not taking all the jobs.
I know this is not rocket science. I need somebody to watch me. I have no discipline. I'm a child.
Exactly.
I'm a baby. Yeah.
This is why financial advisors are never going out of business because of AI.
Preach, brother. All right. Here's a headline that my friend shared with me. I predicted the 2008 financial crisis. What is coming may be worse. This was in the New York Times. And here's the lead. At the start of the 2008 financial crisis, I was at a hedge fund. By its end, I was at the US Treasury. At both, I worked with people only a few years out of college. The drama of 2008 was all they knew about financial markets. Remember what's happening, I told them. You'll never see anything like this again. Now I'm not so sure. Maybe they'll see worse. This is from Rick Bookstaber. We've had Rick on the podcast before, and this piece, gotta be honest, was complete trash. No offense.
So I read it.
Actually, you know what? Offense. Rick is a nice guy, but come on, man. What is the point of this? First of all, what was in here there was nothing in here. Now, it's for a general audience, so I understand maybe but there was nothing novel in here. It was AI, it was private credit, it was concentration in the S&P 500. Dude, come on.
Yeah. And then
what are we doing here?
Risk is too far out of the spectrum.
You feel good about publishing this?
There has to be a catalyst. In his defense, maybe he didn't write the headline, but the whole point of the article, yes, it does not feel, again, there has to be a catalyst for this stuff happening. It can't just happen because people are taking too much risk. That's way too vague. There has to be like, what is going to cause this? I agree.
But think about how many people read this and did something that they're going to regret with their portfolio. Now, he might truly think that he's helping people, that this is really, we're about to enter 2008 and I'm saving people. All right, maybe. I suppose he won't be the first or last to have done that in the last 15 years.
How many headlines have there been since 2008 that read, I predicted the 2008 crisis, or he predicted, or she predicted? There've been a million of them, and not one of them has ever come to fruition. I got a question for you. I have a theory, but gold is down. I think if you're an intraday person, gold is down 20%. If you're not an intraday person,
big intraday person,
you're looking at just
I don't understand.
GLD.
Are those not real prices?
It is, but if you're looking historically, it's just easier to do open and close. So gold is down, we'll call it 20%. Okay? It's down quite a bit. It's selling off hard. I have a theory here. I want you to tell me why you think it's down so much first.
Well, I want to hear your theory first.
Okay.
I don't have a
theory.
theory.
I don't know if because you usually have more realistic theories. Mine are more like out in the,
Okay. All right. So before you give me your garbage take, Todd Sohn has a chart showing the daily gold ETF flows on a rolling 20-day sum and negative 2 standard deviations on the outflows. The worst 4-day sell-off since 2000. Or no, that's wrong. It says
2013. No, this chart just says 2000. It's since 2013.
Oh, that's right. Okay. So worst 4-day sell-off since 2013. So the reason why gold is falling so much is because there are more sellers than buyers. What's your theory?
Well, duh. But so we had a trend following hedge fund that we invested in 2008. And it was the only thing in 2008 that went up. It was up like 15%. Everything else was down. Everything got killed. And in 2009, we asked the manager, like, how is business going? You must be getting a ton of money coming in because of this early 2009. Things were still not like, people didn't know what was going to happen. And they said, no, it's the craziest thing. We're the only thing that's up in anyone's portfolio this year, and we're the ATM. Everyone is pulling from us because we're the only thing doing well. And if you need to sell, what are you going to sell? The thing that's down or the thing that's up? And I think gold is in an ATM effect right now. Like, people are a little worried about what's going to happen here, and they need to sell something. And what are you going to sell when you're a little worried? The thing that's up a lot. And that's what's happening.
I like it.
It's the ATM effect, right?
I like it. Yep, okay. I buy that. So yes, more sellers than buyers, but I think that you have correctly identified why there happen to be more of one than the other.
Yeah, you wouldn't sell the thing that's getting smoked. You sell the thing that's doing really well. All right, so I mentioned that the markets rule everything around us. Did the bond market win again? Because we got 2-year treasury in March, like, I guess this is like 3 weeks ago, the 2-year hit the low of the year at below 3.4%. Then it shot up to 3.8%. And maybe intraday higher. Is this just another thing of the bond market spooking the administration again? To be like, okay, all right, we cannot upset the bond market. It really is pricing in rate hikes and not, higher inflation, and this is not good.
Yeah, the Yields are shooting again higher this morning. It really is just
So yields are
remarkable.
still going up again or back up
It is
again today.
remarkable that the market is just hanging in there.
Right, because
Even as
mortgage
of,
rates are back to 6.5%, right? Like this is gonna have, even if the ripple effects are again a few months, if we stopped everything now, it's still some ripple effects.
Oh, I have a better movie analogy for the market not selling off.
Okay.
Outside of Forrest Gump. I know what you did last summer. When Jennifer Love Hewitt is screaming, "What are you waiting for?"
Oh, all right, that's pretty good.
Thank you.
All right, did you read the new Binder piece?
Nah, I'm over it. I retired.
Okay.
I don't need an update. I'm good.
I thought the update was interesting. So the first one, he went to 2016 and he said, 89 firms accounted for $43 trillion in net wealth creation, right? 60% of companies underperform T-bills over the long term, all this stuff, like groundbreaking research. You're over it. But he updated this through 2025. And now, so it was, again, 89 firms, 43 trillion in total net creation, right? Now, 46 firms account for half of the 91 trillion in net wealth creation. So it's just saying this past 10-year period is just the concentration has got even more. Like it's a smaller and smaller number of stocks that have made the most wealth over the long history of the stock market.
Yes, we know this to be true. I can. My ability to be, has gone to zero for something like this.
Really, nothing.
No, there's nothing else that can come out of this type of a study. I also reject it a little bit. I mean, obviously the takeaway is this is why you index. You don't need to convince me of that. I'm already there. I've been there.
Yeah. You casted a wide net so you can make sure you get these winners. The interesting thing to me,
but hold on, but also like, yes, we know that buying and holding forever individual stocks is a terrible idea. Empirically, most stocks are not worth marrying. Guess what?
I don't think a lot of people know that. I think the school of Warren Buffett taught people that you just buy and hold stocks forever and you'll be fine.
That's true. That's true.
I think there's a lot of people who need to learn this lesson.
That's true. And also in the real world, and this is the biggest gripe that I have, nobody does this, okay? Nobody buys a stock at the IPO and holds it forever. And when I say nobody, yes, there are people that have made fortunes doing that but like in general, nobody actually buys a stock at the IPO and then doesn't sell it forever. This is not the way that markets function. People are buying and selling every day. And so just because stock XYZ, Disney, for example, Home Depot, for example, these are at multi-decade lows relative to the market. Like in other words, Home Depot hasn't outperformed the index over 30 years or something crazy, right? Does that mean that there were opportunities to make money in Disney or Home Depot over time against the market over a 7-year window?
Yeah, all right. We give this caveat every time. Here,
but it's true.
It is true. You're right. Look at table 2. So this gives the stocks with the highest annualized returns over at least a 20-year period. And NVIDIA's the highest, which is crazy. 37% per year, go back to 1999. Netflix. But look at some of these other names that you've never heard of. Axon Enterprise, Plenum Publishing, Lynn Broadcasting, Pioneer Group. A lot of these companies that you've never heard of before. Again, these are like 20-year plus periods. There's a lot of them on here that would surprise you that you've never heard of before. Manor Care.
Wow. Right? I haven't heard of most of these companies.
Exactly. That's surprising to me. Anyway, all right. Fine. You're not impressed anymore with Binder. I am. I think this is some of the most important research that's been done this century on the stock market.
I agree. Well, this is major confirmation bias for you. And I'm not saying that in a bad way. But this is like hammering home what you believe to be holy ground.
But I think before I saw this research is it's more concentrated and more confirmation bias than I would have even thought before I saw the
Correct.
data.
You saw this and you were like, I knew it. And here's proof. And me too.
No, I'm saying it's surprising to me how concentrated it really is. I never would have thought it'd be this concentrated. It really is.
My only point is, not my only point. We saw this stuff. This is like 2017. When did this first come out? It's just there's been 5 iterations.
Yeah, and he did the update, and it's even more so.
All right, Mr. Bassett-Midler, Professor, could you give us 3 years? Give us like 3-4 years until the next one.
All right, such a hater.
Me, the hater. You hate happy birthdays, you grouch.
Duncan said I'm gonna get trolled hard for that take. That's fine. I've given it before. Yeah, Ben the Grouch. That's true. That's
But
what happened with the weight.
you're not actually a grouch in real life. But this is
No,
a
I'm
weird
really
tangent.
not. I just
Yeah.
anyway. Um, which is funny because if you ask my parents, I loved my birthdays when I was growing up. My mom would always make fun of me because I was so into it, and now I just don't care anymore.
Oh,
So
so you got birthday shamed. You're
maybe that's it.
embarrassed.
Maybe I'm fighting
Yeah.
back against being
The
shamed.
truth comes out.
All right.
You know what? Fine.
Yeah.
Nobody say happy birthday. See if I care. I don't care at all. Minding my
Okay.
business.
So this is interesting. This is from Jason Furman in the New York Times. He wrote an op-ed. He said, "If you hate Trump's economy, I have news for you." And he breaks down the economy under Joe Biden and the economy under Trump. And it was basically 2024 versus 2025 or later. And he breaks it down by GDP and inflation and real earnings growth and the S&P performance and mortgage rates and the unemployment rate and gasoline prices and the budget deficit and trade deficit, all this stuff. And honestly, it looks almost exactly the same, right? Like all the stuff Trump has done and the economy basically is the same. All the stuff Biden did. A lot of people hated the stuff Biden did. The economy looks the same as it does today. A lot of people hate the stuff Trump is doing. The economy looks the same as it did under Biden.
Can I
The
just
point
point
is-
out one thing? It's the direction.
Sure. Okay.
You know the
Economic
memes.
data is-
You know the memes. You know the memes where it's like Bitcoin at 70,000 and Bitcoin at 70,000 like a week ago versus today, and it's like Jennifer Aniston and the guy
Well,
with
it's
all the
the
wrinkles on
journey.
his face. Yeah.
But the other part that we've talked about a lot is you look at the sentiment among Republicans and Democrats. When Biden was elected, then the Republicans hated the economy. Trump was elected. Now they love it. Biden was elected. Democrats love the economy. Trump was elected. Now
Can I
they
ask you
hate
a
it.
question? How
The
can
point is, it's the same
shouldn't-
economy.
Yes, more or less. Shouldn't or should not a number like this, consumer sentiment, shouldn't it be capped at 100? Just 0 to 100. How come it goes all the way up to 140?
That's a really good point. It's kind of like the QBR rating in football. Like, why is it like 159 or something? Why isn't it? Everything
Yeah.
should be capped at 100 or 10.
Yeah, a perfect 158.3. Oh yeah? How about we just stop being cute and just cap it at 100?
I guess the point is all this stuff that's gone on this decade, and the economy is so big and dynamic. It's really hard to like. It's turning a battleship, right? It's not like this thing pivots on a dime. It takes a while, and all the stuff that these presidents do, it matters in the headlines in the short term and some market stuff, but for the economy overall, it's really hard for them to change the overall shape of it. It's that trend is hard to break, whatever trend it's on.
Okay. Last week we spoke about new home sales. I think maybe this is a better demonstration of what we were talking about. Pending home sales. So not just new. Lowest level in history. It is amazing. It really is amazing that
So why
the
this index
market,
should go to 100 as well?
it's a great point.
Why does it go to 130?
All right, new rule. 100 is the max for all these indexes. It's a great point, Ben. The housing market is in an absolute ice age. Yeah, why isn't the market lower? Isn't housing a third of the economy?
It is pretty bizarre. I think housing is like 20% of the economy, but that includes all the construction and furniture and moving and all the other costs that are, lending. I mean,
We were just speaking about.
if you work
We
for
were
a
just
mortgage
speaking.
lender
Go ahead.
and you've been waiting for years and years and years for mortgage rates to fall so the housing market can become unthawed, and it just hasn't happened yet. It's got to be exceedingly frustrating. I can't even imagine working in that industry.
Well, I think it's beyond frustrating. These people's livelihoods have been taken away.
Yeah.
All right, this ties in nicely with the best in their study. I had Claude make me this chart. Scroll down, Ben, to the real estate section. So Home Depot stock is getting smushed. Okay?
All
It
right.
is breaking below what had been support. It is now the lowest that it's been in a long time since.
Don't you think a lot of the renovation stuff was pulled forward?
Well, of course. So this is how the market works. So Home Depot is flat since April of 2021. So I had Claude do this thing for me. I said, hey, show me the cumulative US home sales over the last, 5 years, basically, where Home Depot has gone nowhere or has delivered, let me rephrase it. Home Depot has delivered cumulatively 0% returns for its shareholders over this time period. Of course, it went up a lot, came down a lot, but if you bought it 5 years ago, thinking there would be a home boom, you were right and you lost money. So $9 trillion worth of cumulative sales since April 2021. And Home Depot, which theoretically would have been one of the biggest beneficiaries of all of this home sales, the stock has gone nowhere. And this is why, for me, I have a very difficult time buying and holding a stock.
Makes
I know
sense.
too much.
Yeah.
I've seen too much, Ben.
I was bullish on the housing market in 2021 and I bought Zillow. And it's been crushed since then. Done nothing essentially. I sold it a while ago, but
There's so many examples of this.
yeah, it's hard.
Of companies just winning and their stocks anticipating the win and just pulling forward a lot of returns, and then eventually investors getting disappointed over and over and over and over and over and over and over again.
All right. So last week we did an update on, what did we update that we were wrong? Oh, the GDP now is 5% and it really came in under 1%, right? I like doing these throwbacks to previous episodes. Ernie Tedeschi did the share of total expenditures by top 10 households by income. And there's that chart going around from Moody's that shows the top 10% is spending 50% of all the money, right? Unfair, K-shaped economy. Matthew Klein said, this doesn't match the data. Ernie Tedeschi said, yes, let me find it. The share of expenditures by the top 10% of households is actually 22%, 23%, and it's lower than it was pre-pandemic. The actual data for this. They're basically saying there's a data error in the Moody's. It's not picking this up right. He's saying it's actually lower now than it was pre-pandemic. And it's pretty flat too, because if you look at this chart, he's going by 0.2% for every tick there. It hasn't changed at all, basically, in the last 10 years.
Wait, so where did the misreported data derive from?
That's a good question. I don't understand this stuff enough. But they're saying, like, if you check it with the other sources, it's wrong. The way that they're looking at disposable income is not right. It's not, the top 10% is not spending 50%.
Oh yeah, how do I know that this one is right? What does total expenditures include or not include? I want to know. I want to know what was causing the gap in the data.
I do too. All right, Matthew Klein had a whole piece on this. I'll send it to you. It's in I wrote a blog post about it. Oh, right, what did you inflation adjust here? Oh man, you are really into the Claude charts now. The charts that Claude produces look really good, aren't they?
They're so good because not only, so I had it inflation adjust oil and gasoline. Not only does it do that, but it also like annotates the charts.
Yes.
So for all,
I did one last week for median house price versus median income, and it showed me like the peaks and the valleys on the top. Like, it's really, really good.
So yeah, for all the peaks and the troughs, it gives you the date and the why.
Yes.
Great stuff. All right.
Claude's coming for Chart Kid Matt.
Never. New vehicles. What's going on? I missed this article. Okay.
New York Times has an article. It's just crazy. High car payments make ownership feel impossible. And it's not because most people buy a car every 5 to 7 years maybe. So I think there's a lot of people who are now cycling in going, whoa, I did not. And they interviewed a lot of these people being like, this is crazy. And they interviewed someone who was a 20-some-year-old who bought a brand new $80,000 car and like had to get it repossessed because they couldn't afford the payment.
That didn't happen when we were kids.
No, of course not. But it says new,
right? Am I making that up?
No, you're right. The new car stuff it's way, way different.
The first car that I bought when I was kicked out of school for the second time, I was home and I was working full time for years because I had to pay rent in Indiana like a schmohawk, which whatever, another story for another time. But I was working full time and my bank account was my coffers were filling up because I was living at home and I was earning wages, Ben. And I bought a used G35. Remember that car? The sedan. You don't remember the Infiniti G35?
Oh,
You are
okay.
really not a car guy. Okay. So anyhow, I paid $26,000 for it. And that was like a cool car for a kid to be driving.
Wait, I thought you said this didn't happen. You did it.
It was $26,000.
Okay, that sounds a lot for back then. My first car was, you'll be surprised to hear this, a Honda Accord that had 110,000 miles on it, and we bought it for $2,500.
Yeah, but your parents gave that to you?
Of course, my brother
Right.
had it, then I got it, and
Yeah, no,
worked on it
I
for me.
paid for this with my grown-up money.
So this
But
says
$60,000 car, $80,000 car for a kid?
nuts. The average monthly new car payment reached $774 in January, up from $588 in January 2021. More than 20% of new car borrowers agreed to pay over $1,000 a month at the end of last year, which was a record. I tend to agree. I think this is another social media thing where more people now think they deserve a new car than did in the past. I think, and maybe that's a misread on my part, but I can't believe more people aren't just buying used cars.
But that's what I was about to say. So my Infiniti was probably 3 or 4 years old when I bought it. Why aren't people buying used cars?
Right? You buy
And
a
maybe
car
used
that just
cars are
comes off
expensive
of
too,
lease,
but
yeah, because the depreciation right off the lot is huge.
not so.
All right, let's talk AI. From the Wall Street Journal, AI isn't lightening workloads; it's making them more intense. Okay, so they looked at an analysis of 164,000 workers' digital work activity, and they did this. They tracked it. What happened when people started using AI? How did it impact their work? Covering more than 443 million hours of work across over 1,100 employees, making it one of the biggest studies of AI's effects on work habits to date. They looked at like the activity 180 days before and after they started using the tools, and they find that AI intensified activity across nearly every category. The time they spent on email, messaging, and chat apps more than doubled, while their use of business management tools such as human resources or accounting rose 94%. So the whole study said people who use AI end up working more, not less. I also think there's this thing where could we see a fake productivity boom where people are worried AI is going to take their job, so they actually work harder? Are we going to see
Maybe.
like a 5-year fake productivity boom because people are like scared of AI taking their job, so they actually work harder? This has been my thesis, and some people will say, just wait. When AI improves, this won't be the same. AI will take over. But this has been my thesis the whole time, that it's just going to make a lot of people work a lot more.
I wonder what the output of the work is. Is it better quality? I would imagine it is. Whoops, I just deleted that by accident. It's too early for these type of studies. I'm happy that they're
See,
out
I knew
there,
you
but
were going to say that. That's
it
the
is.
retort.
It's
Why?
it's like measuring the impact of the iPhone in 2007.
Okay.
What's the point?
Chat's been out since 2022.
True.
I'm just saying.
Still quite early.
Okay. I knew
all right,
that'd be the retort.
You know me so well.
Yes.
Not well enough to say happy birthday, but David Levitt tweeted, "This is quite literally what Skynet does."
Listen,
all right, so
you're free and clear this summer on my birthday. Don't say happy birthday to me.
I can't help it. I love you. I say happy birthday. That's what you do for people that you care about. You just, hey, thinking about you. Good to see you. How you doing? All right. Engineers wanted to make humanoid robots look more realistic, so they successfully grew actual living human skin in a lab and permanently attached it directly to the metal face of a robotic machine.
That's very
So
creepy.
somebody grabbed that and said, this is quite literally what Skynet does to infiltrate the human resistance with the T-800, T-850, and T-888 series Terminators, which are Cyberdyne systems infiltrator units covered in bioengineered living tissue, including skin, blood, and hair, over a metal endoskeleton. Dude, we were just talking about this recently. I think you rewatched T2. That scene where Arnold cuts the skin of Ryan's arm and rips it off rocked my world. I remember I wasn't allowed to see that movie when it came out. I was like 6 years old. My dad wouldn't let me see it. He took my brother and his friend to see it. So I probably saw it like 2 years later, but I had to be 8 or 9 years old. And it like shook the ground.
So so my son is trying to move on to all the other action movies now. So all the Expendables movies are on Netflix. Did you ever watch those movies?
I only saw the first one. It was quite good. No?
I mean, I don't know. They might be some of the worst action movies ever made by like legitimate people. Every action star is in them. Oh yeah, but my son
I have
loves
zero
them.
memory of it other than having a great time.
There's like 4 of them. Okay. So our friends at Crane
Anyway,
Shares had a robot at Future Proof last week or 2 weeks ago. And I made the point again that if you're the first person to buy a robot and the robot turns around and kills you, that's on you, not the robot. That's fair, right? Like you don't want to be the first person to buy a robot if it turns on because it's so strong. That's all I'm saying. But it could.
Speaking of
I asked the robot, "What's
movies,
your favorite dance?" And it actually did the robot.
movies and robots, I watched over the weekend. Not good. Mercy, which was a pretty blatant ripoff of Minority Report.
Okay, I saw that it was on Amazon. I was gonna watch it too.
Eh,
Not good.
no.
Okay.
In fact, bad. Watchable, but barely. You know what? It's like you could put it on the background while you write a blog post at 11:30 at night.
Okay.
It's one of
So
those.
you do know me. That's what I do.
All right. Anyhow, nobody wants this. Please, I don't want to see. I don't want to see this in the world ever. I know it's coming. All this stuff that like people don't like.
Yeah.
So for example, somebody emailed us. It's cool to think about the ability of the tech and what it means for business owners, but just know that if it is implemented at scale across an entire company, it is going to cost at least 3 people their job. Real jobs that offered value for small businesses, real people who are part of a healthy company culture, who work together to deliver a product to customers. I know the tech is new, so the possibilities are exciting. But because of this, the marketing team who takes leads and turns them to estimates, estimators, and project coordinator, who schedules the crews to do the actual work are now on their way out the door. Not to mention the marketers who get leads aren't mentioned, but I'm sure there is tech that shrinks that team as well. I guess it's cool for owners and profitability, but not really. It just kind of sucks. And honestly, for what? To grow the pie? At what cost? And this person is saying what I'm sure a lot of us are feeling.
Oh yeah.
And not to be callous.
This is why
It's
a lot
coming.
of people hate AI.
It's yeah. And I don't really I don't disagree with this person. Do I want everything to stay the way it is? Like, do we need? No, yeah. I wish it could stay the way it is, but for better and for worse, that's not how the world works.
This is the history of the world. Yeah, it really is.
Yeah.
And
So I'm bullish. I think in 50 years, like I don't think that people will look back on like this is a watershed moment of the end of humanity. But not to beat this dead horse. We talk about this every week. Yeah, the displacement of now to then, it's going to be terrible. Real people losing their livelihood. Tragic. Here's another one. Michael and Ben, regarding the debate on yesterday's pod about whether AI is making people smarter or not, I can confirm that Ben is correct on this one. Sorry, Michael, but AI is absolutely making society less smart. All right, so here's the context. High school teacher. 90% of students have no desire to use AI the way Michael does, as an amazing tool to follow their curiosity seeds. Michael's take assumes that most people have things they are curious about, and that's a very fair point. He said, unfortunately, most students do not have interest anymore. This is a super depressing email. They go home after school, ask ChatGPT to do their homework for them, and then scroll on their phones for 8 hours. I promise you that when they are asking Chat to do their homework, they aren't doing it because they want to learn more about biology. Of course. It's not every student, but most are like this. If you thought the gap between the haves and the have-nots is bad now, it's going to get way worse in the next generation between the 90% of young adults that are addicted to social media and conditioned to outsource all of their thinking to AI and the 10% who are learning to think for themselves. I no longer consider my primary job to be teaching content to students. My main goal is to prevent as many young adults as I can from being ruined by technology. This seems a little bit dire.
It's a little over the top. Do you get the sense?
But I get it. But I understand.
I get the sense just from having my kids in school that technology has made teachers, I don't know what percentage, I feel like it's beaten down a lot of teachers. And I hear stories all the time about it's not just the technology, but kids wanting to get their own way. And in the past, it was kind of like I've just heard a lot of times that it's harder to punish kids these days, and it's not as easy. And it just seems like the collective sentiment among teachers is way lower than it was when we grew up. Didn't it seem like? And I went to a Catholic school, so I had some nuns, and it just seemed like the teachers all just like nothing. This stuff didn't get them. Nothing got them down. It's like they just did stuff like if you liked it, great. If you didn't like it, I don't care either. It seems like the teachers nowadays are just way more beaten down by a lot of this stuff that's going on in the world. Is that fair?
I don't
dealing
know.
with phones, dealing with the way different ways kids are these days. I think it's a lot harder to be a teacher today than it was in the past.
Oh, yes, for sure.
I have
No
a
doubt
friend
about
who's
it.
I have a friend who's a teacher in my hometown, and he said he has kids bring a note from a doctor saying, and my friend is kind of an old school kind of guy. He's a throwback kind of guy, and the kid hands him a note, and it says from the doctor, for I can't remember what the reasoning was, but the kid needs access to their phone for their anxiety, like they have to have a phone on
Wow.
them. So the parents obviously signed off on this, and my friend takes the note and he crumples it up and he throws it in the trash and he says, "Go sit down." But that's the
Good for
kind of
him.
thing, right? I don't know what
What
the
is wrong with those parents?
right. They coerced a doctor into anyway.
Are you?
Pretty sad.
Wow. Wow, wow, wow. All right. Okay.
It's a really uplifting episode so far.
My God. What is wrong with those people?
All right. What do we got? Crypto?
The Bitcoin buffer ETFs are working.
Okay.
This is from Todd Sohn. We had the Calamos. You were intrigued by this.
I
Maybe a
used one
year
of these
ago?
funds. When I
Well,
sold my Bitcoin, it was the Thanksgiving of 2024 maybe or something, or 2020. Yeah.
no,
And
25.
okay, and so I
I know it was
said, what
24.
up?
You're right.
So I initially I thought like I don't want to miss out on some potential upside. So I put it in some of these buffered ETFs and Bitcoin crashed and it worked. It
Yeah.
did work.
Remember like the 0% downside one? It looks like it's working. So
Yeah.
cool to see. All right, this is interesting. Real quick, we mentioned Hyperliquid last weekend or last show. I was looking at it over the weekend, the S&P 500. Now, interestingly, I noticed that they called it the USA 500. Why?
Oh.
They don't have carte blanche to just use S&P's proprietary data, right? So our friend Frank Chaparro has a Substack about this stuff, and he quoted Cameron Drinkwater, great last name, Chief Product and Operations Officer at Dow Jones Indices. This collaboration expands access and utility of our flagship benchmarks within digital trading environments. We believe digitally native investors should demand the institutional quality standards that define our indices, and we are thrilled to work with Trade to do so. So anyhow, interesting on two fronts. Remember we spoke a couple of weeks ago about the moat for some of these companies that are getting destroyed by AI. It's like, whoa. You can't just snap your fingers and replace the ratings agencies just because you think you could rate a credit with a robot. That's not how it works. So I thought it was interesting on that front. And also because we had a headline from the Wall Street Journal this morning saying that the New York Stock Exchange, kind of an established player in the financial ecosystem, said Tuesday that it was joining with Securities to develop its tokenized securities trading platform. This would mark a step forward from the tokenized stocks traded outside of the US. Under these current offerings, token holders aren't granted the same benefit. All right, anyway, this is not particularly relevant, I don't think, to like 95% of this audience. But
I just wonder what the liquidity is going to be for these products. Yes,
I mean,
you
I'm
can
sure
trade it, but
I'm guessing at first it's going to be, not great. But for people, for crypto natives, for people that have all their money on the crypto blockchain, who don't want to move their money from Coinbase back into Fidelity, back into Coinbase, you have your money in these crypto native solutions, and particularly for people outside of the United States that want to use their stable coins to access US securities, that's what this is for. Again, not applicable to a lot of people, but the New York Stock Exchange getting in here, S&P getting in here, noteworthy.
it is funny how much people want to know over the weekend what's going on, especially in a geopolitical crisis like this. Like,
Yeah, dude.
where's the
I do.
S&P trading? But doesn't it seem like the after hours is always like a bigger overreaction, and then the market opens and it kind of calms
Sure.
down a little?
Yeah.
But yeah,
This is not for you.
I think but it's going to be interesting. Yeah, people are going to want to use it, but I don't know. I mean, the market used to be open Saturday from 9 to noon back in the day. I think it stopped in the 50s. So
we haven't spoken about these stocks in a while. Dude, Microsoft is getting annihilated. It's down.
on what now?
It's at fresh lows, lowest level since April 2025.
Is it too
It
simple
is in
to
a
think
30.
that people
It's
are
in a 30%.
using it as a proxy for OpenAI?
Sure, yes, I do. It's down 31%. By the way, all of the all of these software names that I sold, not to brag, have rolled over big time. Not very confidence inspiring. Salesforce is breaking not to new lows, but breaking the recent range of, it settled down, breaking down. Not great.
Microsoft down 30. Microsoft down almost a third is kind of crazy. With the market only down 6.
I don't. Listen. It's. I was talking to Jimmy Lebenthal about this. It's going lower. Obviously, the sellers are in control. Okay, duh. You don't need to be a genius to figure that out.
This seems like getting close to plug your nose and buy territory.
It does. Now,
For a company like this,
I will wait for it to stop going lower. Not saying I'm going to nail the bottom of this. I don't even know if I'm going to buy it. But this seems like it's an overreaction at this point. Down 31%. Come on.
That's a lot.
Who's selling?
So this thing went from $4 trillion at the peak to $2.8 trillion now in market cap.
Well, I'll tell you who's selling. If you're in a stock that is in a 30% drawdown and it's your real money, you're scared. Right? I mean, we know how human behavior works. But
well, it's also people looking for AI losers. That's the trend we've been on this. Barry sent me. So I think all the Mag 7 is still down on the year. Barry sent me this article. I regret buying. I wish I'd never bought a house at the cut. And they go through all these stories of people who bought a house. They realize like, wait, this was gonna be a fixer upper, and it's gonna take way longer than I thought. I'll read some. I'll read some quotes from the article. My home felt like these golden handcuffs trapping me in the job I hated. This is from a 39-year-old. If I just invested my money in the stock market instead of buying a home, I'd be a lot richer. Andrea, 27 from Michigan. So in the 2010s, after the great financial crisis and the housing market crashed, there was all these stories, and like the Atlantic and all the coastal elitists wrote all these pieces being like, home ownership is dead. Millennials are never going to buy a home. No one's going to want to buy a home anymore because they saw housing prices crash. And I said, I am shorting this take to high heaven. There's no way. People are going to buy homes. That's what people do. People get married. They buy homes. This is what happens. This is the next stage in life. Do you think that there will be a decent percentage of the next generation that's going to change their minds about home ownership and just go, no, I would rather invest in the stock market and rent?
No.
You don't think even like a 10%, 15% of them are like, no, I don't want to.
Yes, I do believe that.
I think that this is going to be a real thing for some people.
I do believe that there will be a certain percentage of the newly home ownership population, I don't know if it's 5 or 15, that will experience buyer's remorse. They got a shitty house, whatever, their job, their life status changed. Of course that's going to happen. However, you have to think about the alternative. If you need to be in a house because you are a growing family, it's just in certain places difficult, and in other places impossible to rent.
Yeah, I just think the coasts. It's such a stark difference between buying and selling. Like if you don't have rich parents to help you or an inheritance in San Francisco or New York City, like you have no shot at buying a home.
Well, it depends on the neighborhood. But on Long Island, for example, you can't rent a house. Yes, maybe like, and maybe maybe there's like houses here and there, barely, few per neighborhood.
You're right. In Grand Rapids,
but by and large,
same thing.
If you want to be in a house, you got to buy it.
So this is interesting because the Wall Street Journal had this piece. Their home wouldn't sell, so they became America's latest accidental landlords. And they told these people who like, I put it on the market. People weren't buying what I was putting out for the offer. So I decided, listen, I got a 3% mortgage. I'm going to rent it. I'm going to just buy a new house and I'll be a landlord. And they said that this is 2.2% of rental listings on Zillow in November had previously been listed for sale. In some places, Houston, Denver, Austin, Tampa, it's even higher. It's like 4%, which doesn't sound like that much, but it's the highest it's been on record, they're saying. And so people list their house, they can't sell it, so they decide just to rent it instead. And they have all these stories about people going, oh, this is awful. What a terrible experience this was. My home got wrecked. The bathrooms were gross. I had to fix stuff. I didn't want to do this. I think that's owning rental homes can work for people who know what they're doing. If you don't know what you're doing, I would not want to be in that position.
I did that. And I got very lucky. I could not have gotten luckier with the timing of it. When I bought it, when I sold it, and it wasn't fun. And I had like almost no problems. Owning a house, whether, even if it's your own house that you live, it's a money pit. It's a lot of responsibility. And it's the type of thing that it's a type of thing that you can't know until you know.
So remember, I actually have a positive story on this. It was probably like 18 months ago. We had a little shingle problem with the roof. We had a little leak, and a roofer had to come. Remember, he said, "Listen, I don't even show up to your house for less than $500. It's $500 to get me in the door, and then whatever it costs." And it took the guy 10 minutes, and I paid him, I don't know, $1,200. It was ridiculous, but like, what are you gonna do? I can't get up and fix the roof myself. So at our place on the lake, it's really, really windy, and I had like 5 or 6 shingles that blew up. My neighbor said, "Hey Ben, something's wrong with your shingles. They blew up." So I got a recommendation for a different roofer. Try someone else. The guy came. He said, "Oh yeah, I get up there and I could caulk them down and I staple them in place." And he said, "You know what?" And he got up there. And it took him 10 minutes. He fixed these 6 shingles that I probably could have never done. I would have messed it up somehow. And he's like, "I had to leave the top because he wanted to have a little whatever." He's explaining to me. I don't know what he's talking about. I said, "All right, that's awesome. Great work. What's the easiest way to pay you?" He goes, "No, free of charge." So what do you mean free of charge? And he said, "This is how we grow our business. We have no marketing budget. If we have a small job like this, that's going to take a few minutes." And this guy drove 45 minutes to get there probably. He said, "We do it free of charge. All I ask is that word of mouth. If someone asks you for a roofer, you use us and tell me." And
Wow.
I said,
I love that guy.
"Wow, that is a great business idea." He said, "You know what? What's crazy? Our business is growing like crazy. We're moving to the east side of the state. We're moving to the north." He's like, "It actually works." And I'm
Isn't
like,
it so?
that is such a
Isn't
great idea.
isn't it so obvious to do shit to behave that way? I want to come back to this in a second. You know who didn't behave this way? The guy that charged me $500 to take a dump in my house, leave a stain, and tell me I need to spend $8,000 on a new boiler that I didn't need. That guy will never get my business again. I mean, obviously. All right, there is a perception among people in general, and even at our company, Ritholtz Wealth Management, that if you respond to somebody immediately, that they might perceive you as being not busy. Right?
Right.
You understand that mentality? It's
Yeah.
it's insecurity, I suppose.
Right. Don't they have something
It's
better
the
to do with their time? Yeah.
right. The opposite is true. The opposite is true. This is a hashtag business life lesson from Michael.
I love it when I get an email back right away.
Of course you do.
That's
Of course you do.
great.
Of course you do. So we have a friend in our neighborhood that does our insurance. He does everybody's insurance. And if you email him with anything or text him, he responds to you immediately and always. And if you need something to be taken care of, he does it immediately and always, every single time. And when I get that response, I don't think, he must not be busy. He is one of the busiest people that I know. He doesn't have time to not answer things immediately because it will just stack up.
Right.
So
It should be common sense stuff, right?
It's typically the point of view of a younger person who is like insecure because they don't have like the life experience and whatever. Like, oh, if I respond too fast, they must think that I'm not. No, I'm telling you, it feels so good when a service person responds immediately.
Yes. And guess what? If I have a big roofing issue, I'm never calling another company again, ever. And I'm gonna tell all my friends about this in the area. This is the company you have to call.
Exactly. Anytime somebody tells me, "Hey, do you know an insurance person?" Yes, I have the best guy. The best. He responds to you immediately.
I was really interested in it. The guy's like, "It works better than you can imagine. Our business is growing like crazy." And I was like, that made my day. The fact that this guy didn't try to bend me over to fix a couple of shingles.
People get excited to share positive stories in their life.
Yes.
Right? Because it's unusual.
I went at my daughter's soccer game this weekend. I told like 5 people the story because I'm like, it was awesome. I'm going to send you the name of this person.
Yeah. Anyway, if you want to speak to my insurance guy on Long Island, I'll set you right up.
Yeah, your car broker. Although, do you blame your car broker at all for the fact that you always get a terrible car? Is it their fault at all, or is it your fault?
You know, real quick, because this is not a very interesting story. There was 2 accidents. My car and Robin's car were each in an accident within 3 weeks of each other. I have been in an accident since 2002.
Someone nailed you?
I was pulling out of Starbucks and I was coming this way and she like came in from behind me because there's a camera, right? So like if somebody was behind me, I would have seen it. I hit her. It's like, how did you hit? I'm like, I'm so sorry. You okay? Give me your number. I'll take care of it. It was very minor damage. I texted her. She never responded.
Didn't want to deal with it, huh?
Anyway, and then somebody backed into my wife, so I took the car. Who cares? Very not interesting.
Fun stuff. All right. So private credit. This is from CNBC.
Let's say this for next week. This story is not going anywhere.
Okay.
We're already we're an hour and 5 minutes into the episode.
Okay.
Because I don't want to rush through this. There's some meaty stuff in here. Here's the only the teaser that I will say. Yes, private credit has problems. Or yes, there will be problems in private credit. There's no doubt about it. Don't insult our intelligence and tell us that the portfolio is performing. We know nobody's worried about the performance today. It's people are worried about future disruption with a lot of these software companies.
Yeah, this is an illiquid asset class, so it's not like all of a sudden in a month things will automatically be better, and you'll notice like it's so slow moving. I don't know what changes the current trajectory.
Here's the LOL in all of this. The Cliffwater Direct Lending Index, which traces its inception back to 2005. The worst year, of course, is 2008. The return was negative 6.5%. It is really kind of amazing that we're spending this much time on it. And we should be spending a lot of time on it. But if you contextualize it this way, that let's just assume 2027 maybe is a bad year, and it's going to lose, I'm making this up, I can't know, 4%? Right. It's just kind of hilarious. Like, that's a bad day in the stock market.
Right. It's not going to be like a 50% loss or something.
Okay. All right. We'll get more into this next week. We'll actually put a pin in this as well. Kalshi raised more than $1 billion at a valuation of $22 billion. I don't get it. We'll cover this in depth next week. One thing that I do like,
big number.
One thing that I love, Delta One, Walter Bloomberg tweeted, Kalshi to block athletes and politicians from trading. Thank God. Thank God they're doing something right.
A lot of people are like, why is this not a regulation already? Why did they have to do this? This should be regular. The government should tell them this.
It's nuts. It's nuts. Again, another thing, 100% approval rating. Government officials, particularly elected officials that are making laws, should not be allowed to own individual stocks. If people in the financial media that are anchors can't own individual stocks, are you kidding me?
It's crazy. All right, Bloomberg had this huge feature, slashing tax bills for rich investors is a $1 trillion business, and it goes through all these different ways that people are now. It's saying like, listen, I know active managers can't beat the index, so I would rather have tax efficient strategies. And it goes through all these different, the tax for long short stuff, 351 conversions, box spread borrowing, no distribution ETFs like box, these private placement life insurance and direct indexing and exchange funds, all this stuff now that you can do. And I don't think people outside of the wealth management industry realize how big this tax aware investing stuff is getting and going to be. And it's just going to get bigger as baby boomers need to sell down their assets in the years ahead. This is going to be an enormous business. And I think people who aren't in this, if people who aren't rich knew how easy it is, not easy, how many avenues there are to defer taxes, I think they would be madder than they are about the rich. The solutions that are out there now are kind of insane.
If you have assets, if you have $1 million, I'm making that number up. If you have an investable portfolio of any size, the tools that are available to you through wealth managers like us, it's mind-blowing stuff.
There are times when we've said, I can't believe this is legal, but it is. We've got tax lawyers on it, and people look through these with a fine-tooth comb to make sure like this is on the up and up. And it kind of seems like, how is this even possible? That people have realized ways to.
Now there is no free lunch with this stuff.
No, taxes are paid eventually. These are like deferral strategies. But we know a tax, if you have a lot of money and you can't put all this money into a tax deferred IRA or whatever, the ability to defer taxes and let it compound just makes the money way bigger. So anyway, this is a thing that in the years ahead with wealth management, this is going to be the thing. I don't care if you outperform the index. I care if you on a after tax basis.
All right, great news in movie land. Project Hail Mary joins Christopher Nolan's Oppenheimer in becoming only the second non-sequel or non-franchise installment for the past decade to open to $80 million or more domestically. IMAX kicked ass. 20% of the overall domestic market.
Nuts, with 2% of the 2% of the theaters, whatever you said.
Yeah, it was so good. The book was amazing. I think when we found out that they were making a movie out of this, we were like, how are they going to do the alien?
Yeah, I was nervous.
What 2 nitpicks that I have. Did you watch the movie or no?
I haven't seen it yet.
Okay, so 2 nitpicks that I have. It was too long, whatever. It was 15, 20 minutes too long. Maybe I missed it, but, and this is not a spoiler, the premise of the book and the movie, which was very true to the book, is that Ryan Gosling wakes up on a spaceship and he doesn't remember how he got there.
It's a great start to it, yeah, to the book. I remember that.
And there are all these flashbacks and slowly he's putting the pieces back together. I don't know if in the movie they made it clear that he didn't remember how he got there. Because there's not like that exposition where he's not like, hey, where am I? Right? Like,
Yeah.
now maybe they explained it and I just missed it. Maybe I wasn't paying attention. But anyway, that aside, this was exactly what you want from a blockbuster. It was so good. It was so much fun. It was super kid friendly. Matter of fact, I'm going to take Kobe probably this weekend to go see it. Because I want him to have that type of experience like I did, seeing all these movies at a young age. It is one of those things that he's 9 years old. He's going to remember seeing this for the rest of his life.
So I haven't taken George to an IMAX yet, so I might have to do that for this weekend for him. We had a trip this weekend. We were on the road. We went to a March Madness game for Michigan women's basketball game. My daughters loved it. So we're driving. And on the way there, my wife put on, she listens to the Kelsey Brothers podcast because she's a Taylor Swift fan. So, of course, she follows the Kelsey Brothers. And they had Ryan Gosling on. Is there a person right now in entertainment with a better approval rating than Ryan Gosling?
No.
I mean, I listened to him on the podcast, and I've never heard him on the podcast before. He had amazing stories. He was funny. He still seems down to earth. I don't think there's anyone with a better approval rating than him right now. Everyone loves that guy. And how could you not?
The story of the movie is that there are these little microbes that are eating the sun. And of course, it's going to kill everybody on the planet.
And so Gosling talked about how Andy Weir was part of writing the movie. And the whole thing was like, he gave all the credit to this guy who wrote the book. He's like, we wanted to stay true to this guy's book because the book was so good.
Brilliant.
We just didn't want to mess it up.
But so Ryan Gosling had chemistry. So he meets an alien out there and they team up to tackle the problem. Not a spoiler, it's in the trailer. He had on-screen chemistry with this alien. Like it was just so much fun. It was so great. And the IMAX is like, at least the one in New York City, the giant one in Lincoln Square, you can't get in. It's like sold out forever.
Interesting. I'm sure. It's just a better way to watch
it. It's great. It made me really happy. It was so good.
Okay. Any other recommendations for you?
No, just I'm enjoying DTF quite a bit.
Okay, I took your recommendation. I watched the first episode. I love the shows with subtle humor like that. The show made me laugh a few times.
It's very funny.
But you have to. I feel like you have to have the right. Some people wouldn't think so. Some people, but I really liked it. I watched Rooster too. I plowed through the first few episodes of that. Good call.
That's a you show, right?
Sometimes it's nice to just have a 20 to 30 minute show that doesn't have like it's not like the weight of the world on it. It's just kind of a relaxing show.
It's light.
But here's what I love. I love because this was in Good Fortune, which did you watch yet? The Keanu one?
I never.
Okay.
What's that?
The Aziz Ansari, Seth Rogen.
Oh
one.
No, I haven't seen it.
I love how people with the cold plunge and saunas are getting roasted now. I feel like that's a great thing to roast because they totally roast rich people doing the cold plunge into the sauna, back to the cold plunge, back to the sauna, and talking about how great it is for you. And they do that in Rooster too. And because this is the kind of thing where, you know, the old joke, like, how do you tell someone went to Harvard? Because talk to them for 5 minutes and they'll tell you. You can't have a cold plunge in a sauna today without telling someone about it. You have to tell someone, I have a cold plunge and I do it.
All right,
it's impossible to have one and not tell people about it.
There's somebody in our life close to us that
a cold plunge person
that just got a sauna and a cold plunge. Who do you think it is?
Okay. I have no idea.
Come on, dude. One guess.
That works with us?
Yes.
Oh, Barry.
No. Chris.
Oh, that's true. Barry. Oh, Chris. Okay, cool. That's true. I guess I couldn't see Barry getting a cold plunge. But yes.
No, Barry has no patience for that. Of course, Chris is getting a sauna. And guess what? I'm going to partake. I'm a huge schwitz guy. I love a sauna.
But I love a sauna too, but I wouldn't do the cold plunge. I love how these things become fads though. And it's like, you have to tell someone about it. It's so good for your circulation. Anyway, my wife and I watched Hamnet, which is on Peacock.
Wait, hold on. Just a question. On Rooster, do you think that anything will happen in the show, or do you sort of just think this is what it is?
I think this is kind of what it is, which I like, and I love that Steve Carell is still doing this kind of stuff.
Yeah, it's just very easy. There's nothing mean about it. It's
I
not
think
cynical. It's not an AI nonsense. It's
No.
just good.
And setting a show on a college campus just works all the time. That setting always works. Steve Carell is, I think, an underrated actor for how good he is. I think he's subtly a very good actor. Anyway, so Hamnet is on Peacock now. So my wife and I watched it last night, and the star, she won I think her name is Jessie Buckley. She won Best Actress at the Oscars. Did you bet on that one?
I did not.
Okay. So this is not a Michael movie. I think it's got true and fictionalized parts about William Shakespeare's actual life. Okay, his kids, his wife, and the first 3/4 of the movie are kind of a rough watch in some ways. It's kind of a sad story. I had no idea what it was about. I went in totally blind. Okay, it's a sad story, and the last half hour of the movie is unbelievable. It's so good, and the ending is amazing. And I couldn't believe, I can't believe I was ready to hate this movie. It's just kind of depressing, and it's really well acted. Everyone in it is a great actor. The performances are amazing, but I'm like, God, it's such a downer. And then the end happened, and I'm like, wow, that was very powerful.
Were you on your phone the entire time?
I watched the whole movie. I was not on my phone at all.
Impressive.
I don't think it's a Michael movie.
Oh, I know it's not. Yeah, no.
Okay.
Tell
Robin to watch it, but probably not for you. No, you wouldn't make it 20 minutes of this movie.
Robin, yeah, she doesn't. I don't think it's for her either. She doesn't love it.
But it got me
She's
thinking.
Not a huge movie person.
Bill Shakespeare, if he's alive today, what streamer is he writing for? He starts out at HBO,
No,
then
he's
Paramount
on
poaches
Substack.
him. I'm thinking he'd be writing shows because he did theater, so he'd be writing streaming shows. So he'd start on Netflix or start on HBO because he'd do highbrow. Then he'd go to Netflix. Then Paramount would poach him probably. Right? I'm trying to think what would Bill Shakespeare be writing about these days if he's doing a show. And I'm not gonna lie. I've never seen Hamlet. I did not know what Hamlet was about. Does that make me an idiot? That's one of those things I probably should know. I had no idea. I know the lines. I knew To Be or Not to Be is from that. I had no idea. I knew it's a tragedy. I couldn't have told you what the plot of Hamlet is.
Didn't you see Billy Madison? Shouldn't that have told you everything you need to know?
Close enough. All right. Yeah, Hamnet. It's a film, that's for sure. But I enjoyed it.
Okay.
Especially the ending.
All right. Animal spirits at thecompoundnews.com.
Happy birthday to Michael. Hope you had a great day.
Oh, stop. It's too late. I reject your birthday wishes. Thank you.
At least we'll see you next time. You know what? The worst one is...
It's over.
Happy B-Day. HB... Yeah, anyway. See you next week.